One of our clients, I'm not going to say a name, but I'll just say that he has a contract in business. And he came to us back in August. And, I hear the same thing from most clients when they come to us. It's like, I feel like I'm making money, but I'm paying too much in taxes and I'm not, seeing my money and I don't want to pay no taxes. And I'm like, okay, well, cool. No one wants to pay taxes, but are you setting yourself up the right way and not to have to pay taxes or pay less? Let's say that. Okay, so what we did for this client is, of course, looked at his bookkeeping. It was definitely behind, and that's pretty common for a lot of people that enter into our world. He had an S Corp set up, but it wasn't done properly. He wasn't taking advantage of salary, retirement, all of that great stuff, reasonable comp. So we had to restructure all of that and get those things set up in place so that way he could take a salary and all of that great stuff.
Hey everyone, and welcome to today's episode of Pivot to Profit, where we help entrepreneurs keep more of what they make. I'm your host, Pam Jordan, and I'm joined today by our go-to tax expert, Alexis Sidney.
Hey everyone, how's it going?
Today's topic is amazing and so timely because we are going to be hitting on year-end tax strategies, and we have so much good stuff for you. Before we dive in, if you're a business owner who needs help understanding your finances, saying, tired of the surprise tax bill, they don't know where their numbers are, please go to pamjordan.com, schedule a call with our team. Alexis and I have a full team of tax strategists, bookkeepers, and CFOs ready to support you. All right, so let's dive in. Alexis, it is December 2025. Taxes are upon us again. It is crazy. They come every year. Who knew, right?
Right. I can't believe it.
I feel like we just did this. We just survived tax season and now it's time to do it all over again. So let's start when it comes to tax strategy. And really quick, well, just as a reminder, tax professionals are the people that help you file your taxes. Tax strategists are the people that are proactively trying to help you save on taxes and grow your wealth. For clarification, we are tax strategists. Yes, we file your tax returns, but only after doing a lot of proactive work so that you know how much you're paying and that we are keeping as much money in your pocket and using it for building your wealth. So just clarification there. But now that it is December, it is not too late to still save money on taxes. So Alexis, what is the first thing that business owners need to do when it comes to year-end tax planning?
Well, I'm going to lay down the groundwork first because definitely before we even talk about tax strategy, tax planning, tax prep, all the good stuff, especially for our business owners, we need to know the numbers. We need to know that we have a financial picture, books, a good set of books that's clean, so that way we truly know where we stand. So we always want to start there to make sure that your bookkeeping is up to date. If you've been a problem child this year, you haven't done your books, it's okay. We can help get them caught up so that way we know. And a lot of times I'll see where people just show up. They're like, oh, I can just use my bank statements, or I don't know, just make up some numbers. And, we can't do that because we don't want you to underpay in taxes and we sure don't want you to overpay. So I'm going to just say that's the groundwork. That's the frame. That's the foundation. So let's just fast forward. We got the books good. You're good to go. So the next thing we want to do is definitely know what your numbers are. So now we can say, do you have a tax problem or do you not have a tax problem? If you don't have one, great. If you have a tax problem, we're able to know because we know your numbers and you have good financials and we have the data. So we can truly identify, are you capturing all your expenses? We can see what are you going to owe? Do you have a tax liability? And if it is, how much is it? And it's not when we get to April or March, when we file a return, it's like, surprise, here's that number. No, we can tell you now. In December, we can tell it to you and we can tell you how to fix it. And then we'll also look to see, have you paid any estimated taxes or how much payroll taxes and all of the great taxes, all the taxes we pay. We'll have an idea on that with your books. And now we can talk about the strategy. So of course, we look at strategy from a holistic standpoint here at Pivot. It's great. We can save you some money, some dollars, overpaying taxes, but there's also a bigger picture to that. as far as protection and asset liabilities and all of that great stuff. But just to get the ball rolling, definitely like to look at our foundational strategies just to make sure like you're doing the basics. A lot of times when we get clients that come in, they're not doing the basic stuff. They're like, I didn't even know I can do that. And I was like, well, let's start there. So definitely our common ones we look at as far as strategy is the Augusta rule, where we're looking to see, hey, are you renting your home to your business? Is that an option? Or are you using your home as a rental? Because you do get 14 of those days for the year tax-free. That's tax-free money in your pocket. And most business owners aren't taking advantage of it. We want to hire those kids. I have 3. Pam has 3. A lot of us have 3 or more, and they're in our pockets a lot. And, of course, depending on their age, definitely if they're under the age of 18, the IRS gives you can pay them up to $15,000 for working in the business. So in my case, I have 3. That's $45,000 right there that I can write off. And my kids do work in the business. They help. So we show you how to document that, how to pay the kids. Of course, if they're under 18, you don't have to put them on payroll, but there is a way that you have to do it the right way. So that way you have the paper trail and the documentation. The next thing we look at, just depending on what you have going on in your business, is there any opportunities for any cost segregations, especially if you're in the real estate space, or depreciation? Hey, did you buy some equipment? Did you, purchase some assets? Are we accounting for depreciation? So those are a lot of the common things we look at. And then the reimbursement plan as well, where there's an accountable plan. And if you're an employee of your company, which most business owners are that are making some significant dollars in their business, you can actually pay yourself through the business, but you can get a reimbursement through your payroll for things that we can do an analysis of your real life. What are you paying for out of pocket, your home office? Some do car allowances, health, wellness, cell phones, personal stuff that you had to cover for the business. The list goes on and on and on. But on average, we find that a lot of our clients rack up at least a minimum of about $20,000 in reimbursements that go through your payroll that are tax-free, reimbursed for you for stuff that you paid for in real life using your personal money. So those are the common foundational strategies that we look at. And, that just gets the ball rolling. It allows us to say, hey, we found you X, Y, and Z dollar in savings. You either don't owe the IRS now, you're getting a refund, or you broke even, or hey, we helped you significantly and you don't owe as much as you did. But what I like to tell clients is that we always have advanced strategies. Advanced strategies are game changing because we know that, hey, if we painted this picture and your tax liability to the IRS, instead of paying them the money and you get no reward, you just have to pay them. You can possibly go into advanced strategy just depending on the amount you owe, where you can put your money into an advanced strategy of fund. You can get Forex, deductions. There's different strategies, but one of the common ones I like is a leverage fund. We'll talk about it later, where you can put your money into this fund. You can get up to about X of what you put in. That can possibly wipe out your tax bill. And then on top of that, you actually get your money back in the form of dividends quarterly up to 20 years. So that's game changing. If you gave the IRS your money, they're not giving you nothing back. It's gone.
They keep it and say thank you.
It's a done deal. So this is why it's important to really know your numbers, to know where you stand, so you can know if I owe them 10,000, hey, that's great. As long as I don't owe them 200,000. But if you do owe them 200,000, we can definitely help to do some advanced strategy to make it go away. And whatever money you put into the funds, you can get that back over a period of time. So no brainer there.
I love it. What else do we have?
So we also want to talk about entity structuring, because a lot of times business owners, they're like, hey, I'm just an LLC. And some of them are S Corps and not acting like S Corps. Some of them are partnerships and they should be S Corps, or they're S Corps and should be C Corps. The game is it gets tricky, but that's why we like to look at your entity structure as a holistic point and not just say, hey, everybody's an S corp because I made it to this level. That may not be good for you. So we want to look at that and analyze what your numbers are. Where's your business going? What goals do you have for your business? Are you looking at exiting and selling over the course of the next few years? Do you have some significant things going on unique to your company where it may make sense to not be an S Corp, a pass-through entity, and switch gears and be a C Corp? Are you carrying too much money over to your personal taxes as an S Corp, and now you're in the highest tax bracket there is? And it's like, why do I want to pay 35% where I could just keep it on the corporate side and pay 21%? And now I don't have to pay extra taxes on the personal side. So we look at all of those things because each client situation is different. But again, entity structuring is a game changer. Like I've saved clients like almost millions by just switching an entity. It's so simple. It's so easy. So definitely we want to look at entity structuring as well.
And what we find is when businesses come to us, they typically don't have any sort of tax strategy. They're not aware of the tax implications of their entity structure. They're not aware of that they can take advantages of these opportunities. And so when they come into the pivot world and we do an analysis, we can really quickly identify you can take advantage of these 5 to 7 strategies right now and save tens of thousands of dollars. And even though it's December, some of these we can still do right now. If you're hearing this in January, February, it may not be too late because we're able to make amendments to prior years as well and make adjustments to tax returns. So just because you've paid in $50,000 in taxes doesn't mean that it's a done deal. There's opportunities available.
Definitely. And it's so key to just know what's available to you. Other things that I like to focus on, of course, is when we're looking at strategy and the books and the numbers, just making sure that you're having separate funds for business and personal. So we talk about this commingling thing because we do not want to overstate or understate. So definitely I've seen times where it's like, hey, this shouldn't even be on the books. Like, how did this get here? And it was just an error. Too many bank accounts connected, or the client was trying to set up a personal QuickBooks and somehow it got on the business side and we're like, get this stuff off, So we look at that as well because it's important. We don't want to understate or overstate any income and, throw off our numbers. So definitely just make sure that there is a separate bank account for your business. You're not commingling. We talk about that a lot on this podcast. Check out a previous episode to get more into that part. But definitely also, as you prepare for year end, just make sure you have your receipts and documentation together. I'm always one, like, we can do all the strategy in the world. We can have good books. But if the IRS ever comes knocking, they're going to want to see proof. They're going to want to see proof of expenses, especially if they're a significant amount, large in dollar. Also, we can do all the strategies in the world, but we have to support the strategies. So we here at Pivot have templates and things where we track the strategy and we make sure it's going through the payroll and we have the backup support and stuff that we need to justify. But we can't just put numbers on a tax return and be like, yeah, it sounds good. I hired my kids. Just, yeah, 60,000 there. We have to be in compliance and we have to show that, hey, if you do hire your kids, what are the job roles? Where are the timesheets? Show us that the money moved. There's a whole nother layer there. If you are an S Corp, do you have your family management company? Did you run it through the family management company and not just, hey, I'm taking it out the business? So there's a lot of stuff that we need to do to get documents together. Also with mileage, that's a deduction that I either see clients not take advantage of because they're not tracking it, and mileage adds up, especially if you're driving for your business. But definitely even with mileage, let's just say you're bad and you didn't do what you need to do. You don't have this app on your phone that it tracks you whenever you get in your car and start driving. You can go back and recreate a mileage log. So it's not lost, but you definitely just want to make sure you have some kind of log that you can tie to a calendar and so on and so forth. Another one is, we work with a lot of real estate investors and, there's that special rep status where, they can take all of their losses and not be capped. But, you want to make sure that if you are claiming the real estate professional status, if you're eligible for it. That's a whole nother conversation. That you have the proper log and documentation to document those 700 plus hours a year that is needed. Because again, the IRS wants you to show proof, and you can't just be out here saying, hey, I did this, I did that, I did this, and you don't have the paper trail. So definitely we don't want any problems, and we avoid them up front by having the proper documentation before any of that stuff hits the tax return.
Definitely. And as the year is winding down, it's super important to have your numbers in order and talk to a tax professional now so that you can understand what your tax liability looks like. So you need to know, do I owe nothing? Am I going to get a refund? Great. Or do I owe $50,000? Because right now is the time to know that so that you can do something about it. If you find out in March that you owe $50,000, your options are limited on what you can do to cut that amount and reduce it. So it's super important to make sure that you have these conversations as soon as possible to get your numbers in order and to get your projections. I met with my tax strategist this month, so I know what my number is, and we did some more tweaking and we made it go down, and I'm happy with it. So you need to understand where you are and be able to make changes and implement these strategies in time, because most tax professionals will just tell you, oh, it looks like you had a good year. Great job. You owe the IRS $40,000. Which account do you want me to take it out of? That's not a conversation you want to be having as a business owner who worked really hard, and then you have no idea that you owe taxes, and you have no idea where you're going to come up with $40,000 in March. So make sure you have a conversation as soon as possible so you can understand what your liability is. Because if you have a profitable year, even if there's not money in the bank, but you had a profitable year on paper, the IRS is going to want their piece of it.
So I definitely, if I can encourage anyone who's listening right now, is definitely, if you do not work with a tax strategist, I know we all have tax preparers, we should, to be in compliance. But if you are not working with a tax strategist, definitely should consider getting some tax projections run by our company, or find you someone that you can work with. Because definitely, I always tell clients, you should never show up to tax time waiting in anxiety, like, oh my God, I'm so nervous. I don't know what the bill is going to be. And I'm like, why not? Why? There are all kinds of tools and things and people that you can work with so that if you're going to owe. Your tax projection will tell you that for year end. You're forecasting what has yet to happen, but taking actual of what has actually happened through the year and just painting a picture. When we file taxes, you're going to owe this amount, or you're getting a refund for the federal and the state. It's that simple. So definitely get you a tax projection liability analysis done, so that way you know where you stand. And then you can just know, like, hey, can I do something about this if the liability is significant? So definitely, business owners, I encourage you to do that. Even if you are a high income W-2 earner, because I know we're always talking about business owners, but there are things that you can do too as a high income W-2 earner, where you can, know your tax liability and take advantage of strategies. There's stuff available to you as well. You don't just necessarily have to be a business owner. But what you cannot do is not pay taxes and think that, hey, I owe the IRS. Well, you didn't have no taxes withheld, so there's nothing we can do with that if you're not a business owner. How about that?
I love it. Alexis, can you give us a case study of a client that we've had and the strategies that we took to help them save on taxes?
Yeah, definitely. So one of our clients, I'm not going to say a name, but I'll just say that he has a contract in business. And he came to us back in August, and, I hear the same thing from most clients when they come to us. Is like, I feel like I'm making money, but I'm paying too much in taxes, and I'm not, seeing my money, and I don't want to pay no taxes. And I'm like, okay, well, cool. No one wants to pay taxes, but are you setting yourself up the right way and not to have to pay taxes or pay less? Let's say that. Okay, so what we did for this client is, of course, looked at his bookkeeping. It was definitely behind, and that's pretty common for a lot of people that enter into our world. He had an S Corp set up, but it wasn't done properly. He wasn't taking advantage of salary, retirement, all of that great stuff, reasonable comp. So we had to restructure all of that and get those things set up in place so that way he could take a salary and all of that great stuff. So we fixed the payroll, we ran tax projections because now the books were good, and we determined that he owed a significant amount of money to the tune of almost like $850K. So because we caught this back in August, we had time because it's still not year end. So what we were able to do, like I said, a lot of people just don't know the foundational strategies, the accountable plan, like looking, like I said earlier, at your personal life. What are you doing? Home office. What can we take advantage of because you're an employee of your company and my company pays for me to do X, Y, and Z within legal RAM. So we got the accountable plan set up for him, some of his employees and things of that nature, and it truly helped. He had 2 kids under the age of 18. We hired the kids into the business. He was living in a nice community that was popular for attractions, so was able to use the Augusta rule, but maximize it. Like, I live near a racetrack, but nobody's going to rent my but he was just in a great area that allowed us to look at the market rate to say, hey, rentals can be such and such 14 times a year, 14 days for the year. And that was significant amount of savings right there. And then we did a deep dive as well because there was a lot of, assets that this client had purchased that weren't on the books. So we had to figure that out. It's like that I use my personal stuff. What is business stuff? So we had to get that stuff leveraged and get it on the books and figure out depreciation. The good thing is that bonus is back. So that even helped as well. Then also getting this client onto a retirement plan to substantiate the salary because now you're not taxed at the full salary that you take if you opt into the right retirement plan. And then also this client as well had some real estate stuff going on where he was able to take advantage of some renovations and cost seg stuff that truly helped as well. And then on top of that, he still had a little balance due. So instead of paying the IRS, a little, I say 50K, because in order for some of these advanced strategies, it needs to be 50K or more that you owe. And I was like, why not just opt into this leverage tech fund purchase where it 5X his $50,000 contribution amount. He was able to get extra deductions, walked away with a refund. So he owed nothing. So that's the magnitude of what we can do here with all the skills, the knowledge, the strategies, all of that stuff where if you are a business owner and you are facing owing the IRS, you definitely can strategize and figure out a way not to.
Absolutely. And step 1 is to make sure that you have your books in order so you know what kind of tax challenge you have. Are you going to get a refund or do you owe? And then it's moving and having a conversation with the tax strategist to figure out what are my projections? What does it look like that I'm going to owe? And then having conversations about which of these strategies are right for you. If you don't have kids, got it. If you are an LLC or sole proprietor, amazing. Maybe it's time to change that tax selection to an S Corp or a C Corp, and understanding the ramifications of each of those, and then all the additional strategies that we've talked about. And we have other podcasts and videos for you guys that go into detail into all of these, how to hire the kids, the accountable plan, retirement. We've got videos on all of this. So go back to prior episodes and videos to watch those. If you're wondering, I didn't know I could do that. How do I do that? Go back in history earlier this year. We've got videos detailing all of those. And the important thing here is you don't have to be passive when it comes to tax strategy. And it is not too late. We encourage you to please be proactive. Find a tax strategist to help you get your numbers together as soon as possible. And if you're wanting help, simply just go to pamjordan.com, hit the contact us, and you'll be talking directly to Alexis and I's team and get on a schedule with them so that we can do our analysis and figure out as soon as possible what you need and what kind of tax situation you're in, because we play very different tax strategies with clients based on what their goals are and what their needs are. It's not a one size fits all. Some of these strategies don't work with everyone. So it's important to have a professional that has lots of options so that they can pull the right ones that are specific for you.
I agree. I truly agree.
All right. Awesome. This has been amazing. Alexis, thank you so much for sharing your amazing tax wisdom. I always love having you on the show. So make sure that you subscribe on all YouTube, podcasts, Spotify, and leave a comment. And we look forward to seeing you on the next episode. Remember, it's not what you make that matters. It's what you keep.